Hey everyone, in this video I wanted to address which one I think is the better stock to buy right now, Roku or the Walt Disney Company. Now to answer that question, I'm going to compare these two on revenue, on cash flow, on valuation to come up with the conclusion which one I think is the better stock to buy today. So let's jump right in looking at revenue growth. And what you'll notice is for the better part of the last 4 or 5 years, Roku has delivered better revenue growth than the Walt Disney Company. However, in the recent year and a half or so, they've been neck and neck in terms of revenue growth. However, longer term, I suspect Roku has better growth prospects than the Walt Disney Company. The Walt Disney Company does have a growing segment in the streaming business, but that segment is taking customers away to some degree from its legacy cable TV business, which is shedding millions of customers every year. So while streaming is growing, the legacy TV business is shrinking, and so they're offsetting each other to some degree, and the business is not growing from all points like the way Roku is. Roku is growing its business as not only in adding new products and services, but also expanding geographically. It's already the number one TV operating system in the United States, and it's on its way to becoming the number one operating system in Canada and Mexico. So the company's geographic expansion is going well, and if that continues, there's a lot of room for growth for Roku longer term. The next thing I wanted to compare these two on is cash flow from operations to sales. And according to this metric, in the most recent year and a half or 2 years, Disney has done better job at 8.64%. Roku was on a downward trend line, only recently recovering back up to positive territory. Remember, the big decision from Roku came during the, I would say, middle to late stages of the pandemic when inflation reared its ugly head and most other businesses started increasing prices, passing them along to customers. Roku's management decided and said, no, we're not going to raise prices. We're going to keep our prices flat and we're going to absorb the higher costs. And so while that helped Roku add millions of new customer accounts, add millions of new customers, it hurt the business's bottom line and it hurt the business's cash flow. It remains to be seen longer term if that was a good decision. That remains to be seen. But for now, the implications are evident in the company's falling cash flow from operations, falling profitability. And that's what I'm going to look at next is Roku and Disney's operating profit margin. Like I just discussed earlier, Roku's decision to absorb higher costs truly hurt the company's operating profitability. It was on a nice upward trend line approaching 15% operating profit margin, and that has since collapsed all the way down to negative 22.86%. Investors will want to see progress on this front. Disney, meanwhile, also struggled. Remember, the pandemic devastated Disney's business. It had to shut down the theme parks, a significant source of revenue and profit for the company. It's only now recovering. An operating profit margin of 8.49% is a fraction of the nearly 24% operating profit margin Disney was earning before the outbreak, before the transition to streaming. So Disney recovering, but there's still room to go in that recovery, and there is no telling if it will recover back up to its peak levels of operating profitability above 20%, or if the transition to streaming means lower profit margins longer term. So that's a big risk for Disney. That's a big risk for Disney stock investors. Finally, I wanted to look at valuation, and I chose to use the forward price to sales because of Roku's negative profitability and fluctuating cash flow. Comparing price to sales is more informative right now. And judging by this metric, Roku is more expensive, trading at a price to sales of 2.495 compared to Disney's forward price to sales of 1.564. So if I had to pick one of these two companies to buy today, one of these two stocks to buy today, I would pick Disney. I like Disney's prospects longer term. However, I do believe near term, this transition over to streaming is going to be messy and volatile for the company. So if you're investing in Disney stock, I would look for longer term profits rather than short term gains. But if I was to pick right now one of these two stocks to buy, I would go with the Walt Disney Company.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.